estimator, and that estimator spits out, you have this many bathrooms and a kitchen and a fireplace and those types of things, and this is what we would expect to pay if we were going to rebuild your house at a total loss, meaning it's gone. This is not land value, it's not other structures you might have in your backyard, it's not a fence, it's just the home itself. So there, you're going to plug those numbers in and it spits out a number. Every company will adjust a little bit, they'll be a little different because each one has different figures, but overall they're all going to come within $10,000 to $20,000 of each other. We see that over and over and over again every day. When you review your insurance each year, you should say, where's the rebuild of my home this year in comparison? And then where's my insurance at? Because every year your company is going to increase by a percentage, and that percentage may or may not keep up with what it should be. So over the last probably 10 years, it went up by 1 or 2% every year. And that kept up really well until about 3 years ago. And 3 or 4 years ago, labor, materials just went up and up and up. Disasters were happening, so things just kept going up. And that percentage just didn't keep up. And so this year, we're seeing 10% jumps overall, because they're trying to catch up. They're trying to make sure that if a disaster happens, your home actually gets rebuilt. So reviewing it every year makes sure that you don't have to have these big jumps. And it also makes sure that in between, there's not a gap. Because if there's a gap, you will self-pay to put that back. So they're not going to pay more than your coverage. Now your coverage does have what they call an extension on most policies. And that extension says, well, you have $300,000 in rebuild value, we're going to give you 25 or 50%, whatever that percentage is, above that in the case that in this disaster things go up again. So labor and materials go up. Now here's some more money to make sure it gets taken care of. So making sure that your rebuild value is where it should be prevents unnecessary gaps. So we recommend that. If your insurance offers guaranteed replacement, it's worth the extra. So guaranteed replacement means even if your rebuild value isn't enough, we guarantee that we're going to put your house back where it's supposed to be. And that's a process. They're not going to just hand you a check for $300,000. They're going to say, okay, your first estimate from the builder was $150,000. Here's $150,000. Get it started. Submit work orders to us to get those paid for. And the contractor that you use should take care of that for you. So that's overall where your rebuild comes from. Now, if you have detached garage, a bunch of storage sheds, maybe you have like a little mother-in-law suite in the backyard or something, you want to make sure that your other structure coverage is also where it should be. So anything not attached to your house is another structure, and your other structure is usually 10% of your rebuild value. So if you have a $300,000 rebuild, you got $30,000 in other structures. If you can put all those back at $30,000, you're good. If not, you want to make sure you increase it to put everything back where it should be. Anybody have any questions so far?
Do you know if my greenhouse is added as an extra structure on our policy?
Yep.
Good.
Yeah, we did an estimate to make sure that its value and what you and Larry talked about with that was right where it should be.
Okay.
Mm-hmm.
Good.
So what about contents of the house? How does that work?
So your coverage, it's usually the third coverage listed. It's called personal property, or coverage C. That is your personal property. You take your house, take it sideways and shake it, everything that falls out is personal property. Dishes, clothing, shoes, jewelry, pots and pans, furniture, TVs, it's all personal property. And your personal property coverage is what they will pay to replace those things. Typically, between $5,000 and $10,000 per room is pretty normal, but with things increasing their cost the way they have, it might be a little higher.
So if I bolt my sofa down to the house, does that make it part of the house structure? It wouldn't fall out if you should.
Yourself to the house?
No, the sofa.
sofa to the house.
No, it's.
You know, I'm
it's
just,
no
I know.
problem. Yep. No, and we strongly recommend take your phone, take a video, open every drawer, open all the cabinets, open your closets, and just video to show what it is. Because when a disaster happens, the likelihood that you remember how many towels you had is pretty low.
Low, very low.
So if you just take a video, it gives you a pretty good idea of all the things that you had in each room to make sure that they're taken care of.
Now, I got another question for you, business-wise, like on equipment and stuff of that matter. You know, am I supposed to, when I get my insurance policy, it does cover theft protection, you know? Am I supposed to like turn in receipts and stuff? Like what happens if a piece of equipment actually appreciates in value instead of depreciates? Like how does that work out? You know, like if I had business insurance and the welder I have now was $3,800, now it's $5,800 because of inflation. So how does that actually work? Because they would replace it for the 38, but it wouldn't actually be enough to
Okay. So it
Buy
doesn't
replace the machine.
exactly work that way. So they don't ask for a receipt and say, oh, you paid $3,800 5 years ago, here's $3,800. That's not how they would finagle that. So any policy you have should be at replacement. If your policy says actual cash value, it needs to be changed. Okay, because actual cash value says we're only gonna pay what it's worth, even if it goes down. You buy a TV, it's not worth what you paid for it. Just like driving a new car off the lot. Actual cash value is different. At replacement, what they do is they will pay the amount that they expect for you to buy a new one right now of the similar, exactly the same thing, as close to it as they can get. So if you have to pay $5,800 to get a new welder that is the same make, the same model, the same features, they're gonna pay replacement. So they're gonna pay $5,800.
So I need to avoid the cash
$3,800 is
value.
just what you paid for it.
Gotcha.
And keeping some of those things is good, especially on really nice jewelry, arts, collectible items, but you should have an additional policy to make sure that those are covered at a different value.
So that's an additional personal property.
It is, it's called valuable items or personal article floaters, what the terminology would be.
Can you explain rebuild value versus the actual house value again for the video?
So rebuild value is the cost of the labor, the materials to actually build your home. Sales value is how much will someone pay to live in that home. So sales value also includes the land, it includes fencing, other structures. The rebuild value is only your house itself. In most situations, you don't have to rebuild your foundation. You just have to rebuild the structure and make sure your foundation is secure. So you would also consider that. So rebuilding the home, they do factor in your foundation in the rebuild, but the rebuild of your home is just that. It's just the cost of wood and paint and drywall and fixtures. It's just that. It's not, I can market it, and because every house in my neighborhood sells for $450,000, I can sell it for $450,000, where it actually would only cost a builder somewhere like $300,000 to actually build it.
Okay. Well, that's it.
That was great.